So guys, how I'm seeing these things go is basically there is a boom and a bust cycle with everything that's new in terms of a new tech or a new industry emerging. And we saw that come up in last year in 2023. We saw absolutely everyone blow up, and payouts were wonderful. Everyone was making money, firms were making money, everyone was growing. And then the first strike hit in September. The MFF situation, that actually caused Maven particularly to kind of take a step back and realize that we are in what is essentially the same industry as the crypto market, where there is going to be one card that crumbles. And we started looking at our finances and our growth, and we saw, essentially every firm is operating the same way. We keep operating on the basis that we're going to continue to grow, and we keep spending the money that we've been making on new marketing, new partners, bigger and better features for our firm, right? And then that brings in more people, and it's more inclusive, and it's more competitive. But we started looking at our data and making sure our rules were good long term. We could actually survive a down month. And a lot of these firms, they operate on a growth-only model. And now what growth-only model basically means that they're a Ponzi scheme, in my opinion, in that they have to grow in order to fill the payouts of the previous month, right? We started changing up all of our rules to make sure that they're sustainable and still fair for the trader, of course. And we started to lower our operation costs. That's now our number one goal at Maven, right? A lot of firms, they try to keep growing and growing. I think it's actually smarter to lower your operation costs, because then you can lower your price and be more competitive while still making the payouts. So now we're starting to see a second wave here, where I'm seeing a lot of Trustpilot reviews getting flooded by other firms. It looks like firms are just racing to the absolute bottom here. There's been a lot of firms that are kind of pulling the rug at this point, per se, right? And they're offering really, really crazy deals that they can't support. They've not been able to support, and they won't be able to make the payouts. So this brings us basically to a position where we're now in a bear market, in my opinion, right? Things have been going down. When one firm fails, it means that there's less trust for the rest of the industry. Now there's fewer buyers for the rest of the industry, which means that the prop firms that were operating on a growth-only model, that were actually a little bit better than the ones that already failed, that they didn't go as far. Now those guys are now at risk, and then those guys go under, and the dominoes fall, and they keep stacking. Now, after a few months, right, I suspect this will be completely over. We've now had the meta quotes shut down situation here, where most firms are not running meta quotes anymore, and I believe that anyone who is currently running meta quotes is going to get shut down eventually on that. They're just trying to prolong their time and collect as much cash as possible before they get shut down, because you really can't run from the rules of the tech providers that you're on, right? Or the regulators. You can't run from them. They'll eventually catch you no matter what. So what do we do as you guys? Well, it's likely that you probably want to stick with the major firms, the ones that are showing reputable operations, the ones that are showing honesty, the ones that are coming out of the space and actually talking about what the industry is going on. And you want to stick with these guys until the per se winter is over, right? And then we can start going la la land again and playing with prop firms that are more iffy. But as the current meta stands, I believe that most firms are going to be struggling over the next few months, and they're going to be struggling to make those payouts because they're giving you offers that they can't sustain. Now, what does a proper firm look like? Well, it looks like they actually have rules that are supported, right? And a lot of the times people complain about specific rules, like let's say a lot of firms are now introducing withdrawal caps, right? And this is actually not necessarily a bad thing. This is not them being dicks. This is them properly controlling their cash flow in case of a spike of payouts, because we all know that most firms are operating on the basis that they're a B-book broker, right? Most firms are not able to A-book properly, so they need to make sure their cash flow is steady so that they can manage those payouts. And now if one person had a massive payout, now that puts them as a potential risk for the firm to not be able to pay out their other traders, and it doesn't make a fair environment for everyone anymore. So withdrawal caps are actually a decent idea to help mitigate the risk. And you want to look for firms that are doing things that are mitigating the risk, keeping their operations smooth, their costs low, so that they can continue to make those payouts. and then you should be fine. You don't want to be going with firms that are offering these really flashy features. You don't want to be going with firms that are offering 50% off sales just for a short period of time. These are gotchas. They're gonna get you, and then you're gonna be hooked on the line. You're not gonna be able to get your payout. So the prop firm industry, we really don't know who to trust anymore. We've seen threats specifically on propspace.io. There's been threats to other Twitter influencers to shut down. We've seen people paying affiliates just to promote them. We've seen people paying affiliates or not affiliates, but influencers to gather payouts that have been denied from firms. There's been attacks on other firms, specifically reputation destruction attacks, and we just don't know who to trust anymore in this industry. And it's really becoming a matter of it's very similar to the crypto space back in 2013, back in 2011, back in 2018, all of the bear markets. This is what I'm seeing in the prop firm space. This might be the first prop firm winter. So to sum this up, guys, we basically have an opportunity, let's put it in a positive light, an opportunity to shake out all of the bad prop firms. It's similar to a recession in traditional markets where operations that are not smooth and the CEOs are not competent, they get shaken out, and then our industry is now better, and there's more money for the people who are actually operating properly, right? And then the cash flow is better for traders, and it's better for the prop firms, right? Because there's more money in the hands of the people who know what they're doing, right? So this is a requirement in every industry, because if we were just always in a bull market, then we would just be loose and frivolous with our money and throwing it around everywhere. So this is a really great opportunity to fine tune the prop firm space, make the industry actually a better one, because the reality is the Twitter space and the prop firm space for all around this, it's just a mess right now. Everyone's attacking everyone. It's so much drama. It's so messy, and it's shameful, really. It looks very similar to the crypto space, and I'm not a fan of the crypto space. It's a lot of garbage. So in a couple months, I believe a lot of firms are going to go under. It's going to cause some fear, but stick with the tried and the true. The top firms there's probably about 10 firms there that you can look. Prop Firm Match, for example, the best ones they're all great. I'm not going to promote any specific firm other than Maven, obviously, but they're all great, and you can trust any of them most likely. Now, do your own research, and soon enough we're gonna be in easy times again. So you can look forward to that. Thanks, guys.